Assalamu alaikum, respected teacher. My student ID last digit 174. Today I will present a comparison of the Bangladesh Bank monetary policy statement for the first half July-December 2024 and the second half January to June 2025 of the current fiscal year. The title of the title of my presentation is Monetary Policy First Half versus Second Half of to, to, uh, to 2025. This work is prepared by MD Mumtaz Ahmed, Department of Finance, University of Rajshahi. Uh, Background and objective. The Bangladesh Bank gives a monetary policy statement twice a year. In the first half, July-December 2024, the policy was continuous tightening. A big step was the introduction of a crawling pace for the taka. In the second half, January to June 2025, the policy became much stricter and reform-driven with aggressive tightening. The main goals in both halves are: number one, control high inflation, stabilize the foreign exchange market. Number three, export economic growth, fixed problem in the banking sector. Slide 3. Inflation and policy response. The biggest problem is inflation. In the first half, average inflation was 9.73% and the policy rate was 8.5%. In the second half, inflation became even higher at 9.94%, so the Bangladesh Bank raised the policy rate is to 10%. The target is to bring inflation down to 7.8% June 2025. Slide 4. Growth outlook. But controlling inflation comes with a cost. Growth was 5.78% in 2023, in slowed to 4.22% in 2024. For 2025, the expected growth is the only 4 to 5%. Bangladesh Bank believes slower growth now will help stabilize the economy, and by 2026 growth may recover if reform works. Slide 5. Monetary aggregates and credit. The impact is also clear in money supply and credit. First half, broad money growth 8.2%, private credit growth 9.8%, public credit growth 12.8%. Second half, growth 7.6%, private credit growth falls sharply to 7.3%. Public credit growth rise to 18.1% due to government borrowing. This shows liquidity is being reduced to fight inflation. Slide 6. Liquidity and interest rates. As a result of this tightening, interest rates are higher. First half, call money rate 9.08%, repo rate 8.56%. Second half, call money rate 10.07%, repo rate 10.18%. This confirmed liquidity is tight, which is exactly what the policy wants. Slide 7. Political and Slide 7. Political and economic context. The context also matters. In the first half, reform were slow and inflation was high. In the second half, after political change, Bangladesh Bank got to a stronger mandate. This explains why the policy shifted from cautious to aggressive and reform-based, especially with banking sector reform. Slide 8. External sector and exchange rate. In the foreign exchange market, In the first half, Bangladesh Bank introduced a crawling pace setting 1 USD is equal 117 taka. In the second half, the system moved closer to a market-driven rate. The Bangladesh Bank stopped selling USD regularly and instead published a daily reference rate. This step expected to help remittance and exports. Slide 9. Reserve and balance of payments. Reserve, reserve tell a mixed story. In the first half, reserve improved slightly as the current account deficit narrowed. In the second half, reserves are under pressure due to import payment and weak foreign inflows. The goals remain rebuild reserve through more remittance and exports. Slide 10. Banking sector challenge and reform. The biggest weakness is the banking sector problems, high non-performance loan, liquidity shortage, weak governments. First half, initially a step like NPL, non-performance loans, roadmap and liberalization. Second half, a stronger reform, tax force for NPLs, restructuring of Bangladesh Bank and plans to recover stolen assets. This shows a more serious attempt to fix the problems. Slide 11. Near-term challenge. Challenge for the near future are higher inflation and weak credit growth, reducing economic activity, banking stability due to high NPLs and low trust in deposit. Need to rebuild reserve while facing global uncertainty. The overall outlook for 2025 is modest but stable growth. Slide 12. Slide 12. Conclusion and outlook. To conclude, first half cases tightening, second half aggressive tightening and strong reforms. Priorities are number 1, reduce inflation, rebuild reserve. Number 3, solve banking sector's problems. Short term, painful with slow growth. Long term, if reform succeed, Bangladesh can expect a strong rebound and sustainable growth from 2026 onward. Thank you.